Stocks stage a smart recovery after a weak open as investors shrug off fears of a conflict escalation with Pakistan and focus on the positive developments on trade. Auto and utilities lead the charge while FMCG and healthcare drag.
India and the United Kingdom have concluded a historic free trade agreement 3 years after negotiations were launched. The pact covers almost all tariff lines with duty-free access for Indian exports and revised tariff lines for imports. Alcobev, textiles and autos will be the key impacted sectors.
Indian Armed Forces launched precision non-escalatory strikes on 9 terrorist bases in Pakistan in response to TRF's terror act in Pahalgam. No civilian casualties were noted and no military establishments targeted in the non-escalatory strikes.
US and China have agreed to hold formal talks on trade later this week with Treasury Secretary Scott Bessent and Trade Representative Jameson Greer representing the US in the slated icebreaker in Geneva. Experts, however, don't expect a deal anytime soon.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it's definitely been a nervous session, you'd have to say, for the markets. Yes, there is an intraday recovery which has taken place. But I think the street is definitely going to be watching developments. While on one side, we have all of the positive developments with regards to the FTA, the free trade agreement, as well as, the talks with China on trade agreements as well. The other side, we obviously do have these geopolitical concerns which are making the market a bit nervous at this point in time. So currently, advanced decline ratio a bit even keel. We have the Nifty, which is absolutely flat, as you can see, and the broader markets are showing a little bit of color, so up around 1.2%. currently for the mid-caps. Hi, Mangalam.
Hi, Ekta. Nervous yet mature. We are fairly consolidating right now, not very different from what it was earlier itself. And post the briefings that came in from the Ministry of Defence as well, which were fairly specific, we did see a decline in the India VIX, which had spiked ahead of the briefing in anticipation of what would be the contents of those briefings itself. And as all eyes are on, the updates coming in from the border and Operation Sindoor, we have Parikshit joining in to get us up to speed with what the latest is out here. Parikshit.
Well, yes, of course, there was that exhaustive, comprehensive briefing that was held by Foreign Secretary Vikram Misri and Colonel Sophia Qureshi from the Army, and also Vyomika Singh, the Wing Commander of the Air Force. A very strong message, a symbolic message also being sent out by the Indian forces and the government that our strike has destroyed all 9 targets. These were terror camps operating in Pakistan. 7 of them were targeted by Indian artillery and Indian drones by the Indian Army. 2 by the Indian Air Force. Some of these targets were 100 kilometers away from the border. Some were within 15 to 25 kilometers. So the shorter targets were taken care of by the Army and the longer targets were taken care of by the Indian Air Force. We used precision munitions in these strikes to attack ground targets, such as all these terror camps. Our attempt was to eliminate Pakistan's ability to carry out terror strikes against India. This operation is not over. We've been told the operation is ongoing. There will be more updates over the next few days. There is a high alert all along the LOC. In fact, Pakistan, immediately after the operation, which lasted for about 20-25 minutes, opened fire in a very heavy manner. In fact, heavy artillery shelling from Pakistan all along the LOC and the international border has been continuing, especially in places such as Poonch. Civilian areas have been evacuated. 8 civilians, we believe, have been killed. 2 have been injured. And the military operation now continues. The airspace in airports all along the border have been shut down. This is because of the military exercises and the operation that is on. And heavy security in all vital installations and critical areas all around the country.
Okay, all right, Parikshit, stay on. We do have more questions for you. But in the meanwhile, Foreign Secretary Vikram Misri, in his first response since India launched strikes in Pakistan, says it was deemed essential that the perpetrators be brought to justice. Let's listen in to his comments and the force's response to the strikes.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. it was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate this situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया। किसी भी सैन्य ठिकाने का निशाना नहीं बनाया गया और अभी तक किसी तरह की नागरिक क्षति की रिपोर्ट नहीं है।
All right, let's stick with this itself. In response to the growing national security concerns, nationwide civil defense drill is scheduled today in 244 districts. What are the details about these mock drills and what do these mock drills entail? What would be some of those important of the 244 districts that there are? Let's go back to Parikshit for the same. Parikshit, there's a civil defense drill as well.
That's right. In fact, just to tell our viewers, the last time that we saw these nationwide mock drills or wartime mock drills taking place was in 1971 when the Indo-Pak war broke out. Even during the Kargil war in 1999, we only saw very limited mock drills in some places along the border, not pan-India. So clearly, this is an exercise to prepare and sensitize civilians about what's happening nationally, about to align them with the national security and military operation that is underway across the LOC. Clearly, the operation for Sindoor must have begun immediately after the Pahalgam attack. And similarly, the need was felt to have these mock drills around the country to make sure that the citizens are motivated, they're aware on how to protect themselves in case of a hostile attack. This doesn't mean that we're wanting war or we want a hostile attack. But the fact is, when you carry out a kinetic strike of this kind against Pakistan, where you use artillery guns, where you use fighter jets to carry out terror strikes against the border, then you cannot judge or fix the response of the other side. That's not in your control. There is every possibility that Pakistan may preemptively or may actually want to escalate the situation, and it could lead to a full-blown conflict as well. So one has to work with that eventuality in mind, and that's why these nationwide mock drills are taking place to teach people how to evacuate in case of an emergency, where to hide in case there is an air siren which goes off, how to defend yourself in case of a hostile attack, how to come to the rescue of people who have been injured. How should children, how should college students be trained? So there are awareness camps going on. Of course, hotline centers will be established on how the civilian defense teams should cooperate with the Air Force and the Army in case there is any kind of attack or distress situation. The response times of different teams. Now, we must tell our viewers, the civil defense teams comes under the Ministry of Home Affairs. It is a separate department, Department of Civil Defense. You've got 6 lakh civil defense volunteers across the country. Every state government has a civil defense department, and anyone can join these departments voluntarily. Currently, there are about 6 lakh, and we hear from our sources that the government wants to take the enrollment in civil defense teams to somewhere around 18 lakhs. So they want to motivate people to be a part of this national security operation, be mentally aware about what's happening and sensitize others about the gravity of the situation as well. So 244 districts. Why 244? Because these are areas where the Civil Defense Department of the government has a base in the country. So these are the only places where people can enroll. And in the coming days, you are likely to see more such mock drills happen in schools, in districts, along border areas, all over the country.
All right, Parikshit, thanks a lot for that. So that's the update as far as the mock drill is concerned. As Parikshit was speaking, there was a slight recovery in the markets. The markets have been consolidating around the flat line by and large, but right now it's just a wee bit of recovery, and it's led by a couple of these Adani Group names. So pull up Adani Ports, that's moved higher. We're seeing some traction in,
I think we have the Prime Minister
stocks,
who's
yes.
addressing the media. Let's cut across.
Reflects this spirit. from launching a small rocket in 1963 to becoming the first nation to land near the south pole of moon, our journey has been remarkable. Our rockets carry more than payloads. They carry the dreams of 1.4 billion Indians. India's achievements are significant scientific milestones. Beyond that, they are proof that the human spirit can defy gravity. India made history by reaching Mars on its first attempt in 2014. Chandrayaan-1 helped discover water on the moon. Chandrayaan-2 gave us the highest resolution images of the moon. Chandrayaan-3 increased our understanding of the lunar...
All right, those are some comments from the Prime Minister on Chandrayaan. We'll just keep an eye out on any further commentary coming in on the developments of last night from the Prime Minister. But meanwhile, as we were talking about the markets, there have been individual stocks which have been spiking. What we'll do is actually take a short break, come back. On the other side, we have a couple of result reactions to talk about as well. It's been that kind of week, a bunch of results and a lot of news flow that has come in as well. Himanshu Baid of Medicure joins in to discuss their fourth quarter numbers.
Welcome back. Well, you're still tuned into Halftime Report on CNBC-TV18. Let's talk about a couple of companies now. And in fact, the first management on the show, Medicure, they reported what was a good set of Q4 numbers. Revenue's grown 17% year on year. Margin has increased by around 15%. So to talk more about the earnings, we have with us Himanshu Baid, who's the MD of the company, joining in there. Mr. Baid, thank you very much for taking the time out. This revenue growth, which has been quite strong. First, I just want to narrow in on the domestic business, which has, been quite strong for you. I think it was over a 20% growth that you recorded, and there was a recovery that you've alluded to in the past 2 quarters as well. Just give us a sense in terms of what went right for the domestic business in terms of, say, renal care, your other segments, and what are you guiding for?
See, domestic segment on the renal side has done very well. We have grown around 60% year on year. And that was the guidance we had given in the beginning of the year, that we'll grow by 50%. Then we launched 2 new divisions in cardiology and critical care. So these 2 divisions are very new. We've hired around 70 people in those 2 divisions, but this was the first year, last year. Now this year, I think they will also grow quite rapidly. And that's the plan we also launched our new drug-eluting stent early this year. So all this is part of the domestic business. And this year, I think probably domestic business will grow much faster than the export business. We are probably expecting a growth between 25 and 30%.
All right, 25 and 30% coming in from domestic business. If you could give us a sense on a couple of things. You said renal business has grown well. Yeah. Last year, your target for the full year was 140 to 150 crores. Wonder whether you've achieved that or not. What's your target for next year? And also the cardiology business, what's your target for next year? Along with the margin band. I remember you typically give a 25 to 27% margin band.
So on the renal side, you're right. We have crossed 150 crores of revenue in this current last financial year. And in the current year also, we expect to grow by around 50% again. That's the plan for the renal business growth. Cardiology is very new, but because the base is very, very low right now. But our plan is to probably do 25 to 30 crores of revenue this year, and then grow more substantially in the coming years once we get more regulatory approvals in other markets. But this is just a beginning, so I don't have too much comment on that business, but it's going to grow during the year substantially.
And What about the margins? 25 to 27%? Is that on the cards in FY26, or do you believe it can outperform that?
I think we will stick to that 25 to 27% EBITDA margin for the full year. And I think we'll be very consistent on that. So we'll continue with that, guidance.
Okay, so you're looking for 25 to 27% margins. You're looking for probably, revenue growth of over 20% in your domestic business. The renal business, how much are you looking to probably take it to? What's your eventual
we should
target?
grow, over 50% this year. And that
In
is
the
what we're
renal
planning again for this current FY26 also. So hopefully we should end, around 225 to 230 crores of revenue from the renal business itself.
Okay. Tell us about the export markets now. Maybe if you could touch upon Europe, how that particular business did for you. There were some new launches there.
So Europe is slightly lower in Q4 compared to, let's say, Q1 to 3. And I think we have seen a lot of geopolitical shifts, changes happening in Europe also. So there's a slight slowdown there. But what we are doing is we're trying to recover it maybe through domestic growth, higher domestic growth. But overall, if you look at the full business, we should be looking at around 20% plus over growth for the whole year in the financial year.
That's for the exports business or the overall business?
Could you repeat that again, please?
Is that 20% guidance for the overall business or just the export business?
No, for overall business.
Okay, so that means your exports will grow below 20% because 2/3 of your revenue coming from exports, 1/3 from domestic. Domestic you expect to grow between 25 to 30%.
See,
so exports grow between...
That is the current scenario which we see, but I think some things may change as time progresses. But, overall export has been our core focus, core business. But domestic has done very well. I think in Q2, Q3, Q4, we have done very well in domestic markets. So I think we continue to grow, but I think we have some new approvals which are in pipeline, new certifications. So hopefully the growth should come back. But we are probably guiding for export growth to be between 15 to 18% right now this year.
Okay, so export growth of 15 to 18%. Mr. Baid, I wanted to also touch upon the CDSCO license for this drug-eluting stent. You just about, I think, got approvals in place last quarter.
Yeah.
Has that taken off in terms of sales?
Yeah, it has already started. So we've started sales. We have already implanted over 200 plus stents, in different patients. And we have also signed up for a clinical registry where we will do clinical trials for over 2,000 stents. It will be the largest registry in India to be done ever. So we are already working on that. And lot of other new devices are going to be launched during the year in cardiology space.
So give us, specifically on the stent business itself, how much are you generating and what is your outlook in terms of, say, growth or in terms of other products that you might introduce? See,
I think stent is a very, very new business for us. So it's very hard to guide right now. So probably we'll need 1 or 2 years before we know where we are heading. But we see a huge potential because we have a couple of new designs which we are launching, a couple of new technologies we are launching. So they are very promising. And it's just a start. We are building up the business right now. So it will be very hard to comment, but yes, we should end between 25-30 crores of revenue in cardiology, which has just begun for us. And then we start scaling up in coming years.
And what about the medical devices market on the whole? I remember you had invested about 500 crores or committed a 500 crore investment in production of medical devices. What is the typical revenue run rate on an investment like this over the long period?
So typically, so the 500 crore investment will happen by, let's say, end of FY26 or let's say end of calendar year 26. And so we have already started, working on 3 new manufacturing facilities, again, to augment capacity on the renal. Some of it will go for cardiology expansion, some new devices. So that's already happening right now as we speak. So typically in our industry, investment to revenue is around between 1.2 to 1.5. That's probably how it works.
So you expect about 600 to 750 crores coming in by FY27 or 28?
That's correct. That's correct.
Okay. I just wanted to come back to the renal care business, considering that you're seeing such strong growth. You are installing quite a lot of dialysis machines, if I'm not mistaken. Just tell us about how many probably in a month that you install. Where are you seeing this demand come in? And are you seeing competition in the space? Have exports reduced within the industry simply because there is indigenous manufacturing taking place? And what is the market looking like there?
See, the biggest challenge is in dialysis business is the reuse currently in these devices. And we see that, currently the dialysis filters are used 5 to 6 times in India, the tubings are used 5 to 6 times. And probably that is a big deterrent for the growth in the market. But in spite of all the challenges, because we were the first company to launch such products in the market in India, including the machines. So we have seen a good traction, for making India products. And this year itself, we are targeting to sell around 500 to 600 machines. So typically it will be between 40 to 50 machines a month. And, we see a good traction. And as we increase manufacturing capability and more local indigenized parts and components, I think we'll be able to reduce cost and actually, bid for larger contracts.
Right. And I remember you had some money coming in from PLI as well. You expected revenue from PLI-linked products to be close to what, 100, 150 crores. Where does that number stand?
Input from PLI right now, because the scheme was, not very, well designed, I would say. And I've been requesting the government to actually, reconstitute the scheme, but probably that's not happening. So we eventually didn't get anything for first 3 years from PLI from the renal business. So this is without the support of PLI. But I hope in next 2 years we might get something if we cross certain revenue targets for renal business.
Okay, all right, Mr. Baird, thanks very much for joining in and giving us all of those details with regards to the business. Well, very strong guidance which is coming from the management about FY26. They do expect margins to maintain between 25 to 27%. Domestic growth should be above 20%. Overall growth should be around 25%, led by the domestic business, and renal care would be one of the key drivers there. Those are some numbers on your screen. Car trade tech is up 6.5%, reacting to a 16% growth in terms of revenue. We'll take a break, but Pritesh Mehta will join in to discuss technicals. Stay tuned.
Welcome back. Absolutely flat for the Indian indices, but a big surge in the profitability of car trade tech, and that explains why the stock has seen such a big spike post their numbers as well. 17% revenue growth, as we pointed out before going into break, but it's been on a strong uptrend all through today's trading session so far. The net profit up 86% implies margin expansion coming in as well. But the F&O pack of the day, if you look at it, the Nifty Bank as well as the mid-cap index, absolutely flat for the Nifty and the Nifty Bank. The mid-cap index is doing a lot better, but the market has been consolidating, not just today, over the last 4 or 5 trading sessions itself. If you look at the Nifty days high, it has been coming down for the last 4 trading sessions. On May 2nd, the high was 24,589, then 24,526, lower to 24,510, and today's high, 24,450. But what's heartening is that lows are getting protected between 24,250 to 24,400 itself, and that's extremely positive from a consolidation and a mid-cap index standpoint, and that explains why the advance decline today is also firmly in favor of advance, about 1,500 stocks in the green for about 1,000 in the red itself. Post the Ministry of Defence briefing, we also saw a big gash in the India VIX, so telling you that there is some risk which is likely to be back on the table as fears subside a little bit. But amidst all of this, the street does not believe a big move on either side. Everyone's betting for consolidation. Why do I say that? Because look at the 24,300 put that expires tomorrow, has a premium of 40 rupees. The 24,400 call, again, this expires tomorrow, has a premium of 50 rupees. Even if you're selling both of them, you're playing for a broad range of 24,200 at the lower level to 24,500 at the upper level. That's exactly what the street is betting for. Were we to break out, maybe protection in calls are bought at around 24,500 at 23 rupees a pop. But individual stocks, that's where the story is. BSE is seeing a lot of long positions being added post their numbers. And also SRF, 4% up move is what we're seeing on that stock with a big jump in the open interest. So that's the setup from the F&O space sector.
Okay, all right. So that's what's taking place in the F&O space. We have Pritesh Mehta joining in to discuss the technicals this afternoon. Then Pritesh, hi, welcome to the show. Well, there's definitely more traction in terms of the mid-caps at this point. So give us a sense in terms of, specific stocks that you would be recommending.
Yeah, thanks for having me in the show. Good afternoon. Now, see, despite plenty of action and noise in markets, our indices have been resilient. It has avoided resistance, but it is not reacting downside. It is a good thing. Bank Nifty financial are still the leaders. Mid caps are doing well, as you mentioned. In fact, they are outperforming. Breadth is also mixed. So, and despite everything going around, globally also and on the border also, markets are reacting. It's a very good sign. For us, I think 24,200 is an important support. And if you look at the peak which was made in the month of September 2024, and thereafter the low in March 2025, index has spent most amount of time around the zone 2400, 500. So we need to take that zone out for fresh momentum to kick in. Till that time, at best, I think we are going to go through a period of time-based correction, nothing more than that. And talking about the
Right.
stocks, we have two recommendations on the upside, on the buy side. The first one is buy on TVS Motors. Now, see, the stock peaked out in September 2024. Thereafter, there was a sharp correction, it defended the peak of 2023 and rebounded thereafter. We have seen a pattern of bullish anchor column and follow through moves coming in. So, buy for a target of 3350, and stop loss would be around 2600. The second one is buy on power grade. I think power space is likely to be a good, going to lead from the front even from here on. So when you talk about this particular stock, it had a corrective move in last few months. Thereafter, it formed a base around 2-year mean and recovered, and now it is coming off a small consolidation base. So buy for a target of 345, and stop loss would be 300.
You spoke about TVS Motors. Do you have a view on Tata Motors? Because stands to benefit from the India-UK free trade agreement. Currently, the stock had been, beaten down almost, 35% from the highs, is attempting a bit of recovery. What do you make of Tata Motors chartically?
Yeah, so when we look at the auto pack, we like Eicher Motors, we like TVS Motors, and also Ashok Leyland, one stock that can do well. It could be a joker in the pack. It could outperform big time. But Tata Motors, I think after a sharp corrective move, it is holding on to support, but it is lacking that consistent move on the upside. So I think it is going to take its own time, and rather we should focus on stocks which are outperforming rather than putting our hands in Tata Motors right now.
Okay, all right. So stay away from Tata Motors. Well, Pritesh, thanks very much for joining in and taking us through all of those recommendations that you have. We'll take a short break now. But up next, the management of Aarti Drugs will join in. That stock is buzzing about up around over 5% odd, and they'll be in to discuss the quarter gone by. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, for the markets, it's pretty much consolidating right now for the Bank Nifty, the Nifty and the Sensex. And the mid-cap index currently outperforming. So it's pretty much status quo in terms of the indices and how they're moving on a larger scale. The advanced decline ratio, even keel at around 1:1. Let's get talking about a couple of big movers then. The other one, which is on our radar today, is Aarti Drugs. That particular company gets around 82% of its sales from the API space and 9% in terms of formulations. It came out with its numbers. It was around a 9% growth in terms of revenue. As you can see, the stock is shot up around 15-odd%. Margins also were at around 14-odd%, flattish on a year-on-year basis. But there's been a recovery which has taken place this quarter for the company, especially in the API business. So let's start with that. We do have the management joining in to discuss the numbers. Adish Patel is here with us. Adish, hi, welcome to the show. Well, let's start with, the revenue part of it, because you did mention that API prices were a bit subdued. How did this quarter pan out for you in terms of API prices and the overall revenue growth that you've clocked of around 9%?
Yeah. So the API prices have stabilized since December quarter, which is a good news. And that was the main reason why our second half of this FY25 showed a good improvement in gross contribution margins. And now that it has stabilized, we feel that now we have to work more on the expense side of the manufacturing part to improve our EBITDA further. So in this quarter, we already clocked an EBITDA margin of around 14%, whereas on the standalone basis, it was around 14.5%. So going forward, if formulation business improves more on the margin front, then the margins of 14 to 15% is not far off for us on a consolidated basis.
All right, margin to 14 to 15%, not too far on a consolidated basis. What is your revenue prognosis for FY26? How much comes in from exports? What's your domestic sales guidance? And, in the revenue, what would be the volume? How do you expect prices to move?
So the prices have stabilized now. So we don't foresee any change in pricing scenario as of now.
Got it.
But when it comes to projecting FY26 versus FY25, the first half, we might observe a negative price variance of roughly around 4%. But that was because in the last year, we saw some price decline quarter on quarter. On that account, we are forecasting around minus 4% for the first half. The second half won't see any price decline year-on-year basis for FY26. And whatever growth we are forecasting for FY26 purely on the volume terms, hopefully the current demand continues like this in the coming 4 quarters, and with the addition of 2 more products, salicylic acid and a couple of methylamines, we feel that volume growth should be pretty easy for FY26.
How much? How much volume growth, Adesh?
So around 10 to 15% is what pessimistically we are targeting.
Pessimistically.
Pessimistically, wow.
So that's your base case scenario, you're saying?
Yes.
So what's your optimistic scenario?
So the thing is, salicylic acid has a full potential of around 250 crores per annum. Methylamines, even though it is 200 crores, but 50% of it will be captively consumed by us for our anti-diabetic product, metformin, which is quite big for us, around 12% as far as revenues are concerned. So it will be helpful. Both these projects will be helpful on 2 fronts. One is backward integration, improving the gross contribution, and other is on the sales side. However, I would like to point out that as far as salicylic acid is concerned, so we have been taking big losses for each quarter in FY25, almost to the tune of around 6 crores at a PBT level. So once we reach around 700 tons to 800 tons per month capacity utilization, we'll be breaking even. So that will be additional jump in terms of profit margins for us.
Okay, all right. Well, Adesh, while we've spoken about the numbers, I just want to touch upon your Tarapur plant. You did receive a voluntary action indicated status for it. Correct me if I'm wrong, did it have prior issues when it came to the US FTA?
Yeah. So that Tarapur plant was under import alert from quite a long time, actually. So we were quite thrilled the import alert was removed from that facility, and now we are approved to ship to US from that facility. However, it will take some time to ship to US directly. But the thing is that stigma associated with the import alert with the facility was also hampering our sales in the European markets from that facility. So that will pick up pretty fast, whereas the US will take around 12 to 24 months to come in a meaningful way.
So right now,
what could the revenue be from this plant for both the US and Europe once it scales up?
Yeah. So whatever facility we have right now, that can give around some 85 crores of revenues, but then the profit margins would be really high, which will almost margins would be double or triple what we make in ROW market. Whereas we have more land parcel under the same FEI number, which we can put another facilities and double the revenue potential from that facility.
So, the US was a small part of your business. Now you're probably going to go, full tilt on the US business. What is the plan? Do you want to become a formidable player in the US, or you want to keep it under, say, 5-10% in terms of total revenue?
See, our target would be to keep on improving on it. In fact, after receiving this US FDA approval, we are confident, and so we want to make a move for our metformin facility as well, which contributes around 12% to our revenues. So we are filing USDMF in this particular year for metformin, and we would like to get that plant also US FDA approved. We already have European approval for that plant, but US FDA would be helpful.
Okay, before we let you go, Adesh, there was that UK FTA which was signed yesterday. Any impact on the API space which would benefit you all?
Can you elaborate on that?
the UK free trade agreement was signed with India. Just wanted to understand whether any impact would come in on API supplies from India to the UK,
Okay.
and which would, which companies such as yours could benefit from.
Okay. We don't see any immediate impact because we don't see much formulation facilities in UK. It is mainly in the other parts of Europe like Italy, Spain, and Germany.
Okay.
And other formulations are going directly from from India and China to the Europe. So from API perspective, it may not make that big of a difference for us.
And you still hold on to that 4,000 crore revenue target by FY28 guidance, right?
No, we actually slightly have to revise it down.
All right.
So what we feel that we will still try to make 3,000 crore plus in 2 years' time. And from there onwards, we will take another step to 3,500. This is purely based on the fact that the API prices have corrected tremendously over the last 18 months.
And how would your revenue mix look then? Because right now you have nearly 80% coming in from API formulation, which is about 5 to 8%. You wanted to double it over the next few years as well. Then there's specialty and intermediates, etc. So what does your revenue mix look like at, say, 3,500 crore revenue by FY28?
So what we foresee is that the growth in API won't be that high, but intermediate nutraceuticals and spec chem, these three segments will grow more in the standalone company, and that will be similar to so formulation may not be going upwards of 15%, but the spec chem, intermediate and nutraceutical, that segment can almost double. Now it is around 8%, so it can go like 15-20% as well.
Okay. Any other plants which are under the US FDA scanner, or was it only the Tarapur API facility?
Tarapur, then Sarigam, which we will like to file. And we got US FDA approval for our oncology formulation plant in Baddi this year itself.
Okay. All right, Adarsh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Aarti Drugs. That stock is up 14.5% doing well in today's trading session. A lot of bullish comments coming in, except for the fact that they had that 4,000 crore target. They're now looking at around 3,000 to 3,500 odd crores. And that is because of the subdued API prices that they are dealing with at this point in time. So that would be one of the key reasons. But nonetheless, we need to take a break on that note, but we'll get you more on the markets. A lot of stocks passing around. More on the other side. Stay tuned.
Welcome back. Look at a couple of these pharmaceutical stocks. They're spiking right now. We have Glenmark Pharma, which has moved to the high point of trade. Even from the chemical standpoint, we spoke about fresh longs being added on SRF. That stock too has moved to the high point of trade. L&T from the frontline space has moved higher. Titan, ahead of numbers tomorrow, has moved higher. Has had a listless week so far. It's largely flat, but ahead of numbers, seeing some traction. But the US FDA says that they are planning to expand unannounced foreign inspections. Ekta, is this a cause for worry?
Well, Manglam, interestingly, that's always been the agenda for the US FDA. So they have always wanted to have unannounced inspections, but now they've come out with a press release stating it. And the tone of the press release was more different than what we've seen in terms of US FDA communication earlier. So I think that is probably the key difference. So what they have said is that the US FDA will be expanding unannounced foreign inspections. They are building on a foreign unannounced inspection pilot program that they ran in India and China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies do. US firms already face surprise checks, according to them, and foreign sites often show more violations despite advanced warnings. What they are trying to do is to make it completely objective. For example, investigators will refuse industry-paid travel such as stay, food, etc. FDA, to put it into perspective, conducts 12,000 domestic inspections per year and 3,000 foreign inspections in more than 90 countries every year. Remember, India has the largest number of FDA plants worldwide. Now, surprise, except for the US in terms of the foreign ones. Surprise checks, according to the press release, says that it helps catch bad actors who falsify records, conceal violations. FDA can act against inspection delays, denials, limitations, refusals. Now, the goal for them is safer, legitimate products for Americans and a new phase of tougher, smarter oversight. So what happens is that obviously you don't get time to prepare and you have somebody knocking on your door. You can't hide any kind of mistakes that your plant would be making. And that's the objective, to get a safer medicine out there, to make sure that there's no data integrity and there are no other issues which are present in plants. So from their perspective, it's quite fair. And they have been wanting to do this for a while, but now they've made it official.
Take that point, Ekta. Thank you so much for that. Seems like there'll be a little more work for you as well, tracking all these surprise, announcements that may come by as well when it comes to US FDA investigations, inspections. They've been happening so far, but the company has gone ahead and put it out on paper this time around. I'm looking at Radico Khaitan. It's our special Insight Edge segment. Why am I looking at that stock? Reported a very strong set of numbers. Revenues grew 21%, EBITDA grew 45%, margins expanded as well, and we saw the net profit surge around 71% as well. What was positive, however, was that volumes grew 28%, prestige and above grew by about 16%, and we saw overall volumes being boosted by change in Andhra liquor policy. Add to that, their net debt reduced too. All of these factors are positive. And add to all of this, we had the UK FTA, or the free trade agreement, that was announced as well. There are a couple of reasons why the stock might be lower in today's trading session. One, the street believes that this, volume surge seen in the fourth quarter may not sustain because it was boosted by Andhra liquor policy. So this kind of momentum isn't sustainable. Secondly, there is some profit booking. There are fears of cheap UK scotch coming to India and competing with some of these products in India. The thing is, Ekta, if you are selling liquor in India, you have to go through not only state-wise regulations, you have to get the central approval. So it's not very easy for foreign brands to come into India and directly compete with our players. There is, reduction in duty from the UK, but that is central. We have state taxes as well, and the states haven't moved on taxes yet. So if state taxes increase, then the entire benefit of sourcing bulk scotch would be negated. So that's another uncertainty that the street is looking at. And finally, apart from all of this, there's just a wave of profit booking that we're seeing in the market right now. Nothing really to worry about. We spoke with the management, about their Q4 numbers, more importantly, the outlook for their business next year. And this is what Abhishek Khaitan had to say.
We expect the momentum to continue. And as we have always maintained, our focus is on the P&A category, which we want to grow by at least 15% for the next 2 to 3 years. So seeing the momentum in all our brands like Magic Moment Vodka, which has crossed 7 million cases, our 8 p.m. Black, our After Dark, all the P&A Royal Ranthambore, which we launched, has done 2 lakh cases. So I think we are well set to achieve the 15% growth in our P&A, and our regular also should grow by about 12 to 13%. So overall, we expect the volume to grow in the range of about 13% for the next year. As far as the value growth goes, I think we should grow by about close to 20% plus in terms of sales value. EBITDA definitely would be higher than that. And as far as margin goes, we are consistently with our premiumization working to get the margin up by about 100 basis points year on year. So that is what we are aiming at. We term it as the luxury segment, where we talk about Royal Ranthambore onwards. So if you see in Royal Ranthambore is there, then you have Jaisalmer Indian Craft Gin, then we have Rampur Indian Single Malt, we have our Sangam. So these are our part of the luxury portfolio. Now, if you see in the last fiscal, our turnover was about close to 340 crores, which is a 30% increase compared to FY24. And in the current year, we are aiming to at least have a turnover of 500 crores of only our luxury segment. If you look at our Jaisalmer Indian Craft Gin, in spite of having competition from the overseas players as well as the domestic players, our market share is more than 50% in this segment. And with more players coming in, the category is more buoyant. So I think it helps with more competition coming in, it expands the category. And we are seeing that the gin category is like the vodka. It is now catching up, and it's still in a nascent stage where we are dominating with a 50% market share with our Jaisalmer. So I think with more players coming in, the category will expand.
Okay, so that is Radico Khaitan, but let's now shift focus to BSE, which is in focus after reporting its Q4 numbers. Motilal Oswal has also issued a bullish call on the stock. Vamakshi is here with the details on that.
Well, Ekta, a good set coming in from BSE this time around. When you look at the revenue, that has seen an uptick of almost 10% sequentially. It has come in much higher than what the street was working with. And largely, this growth in revenue is being driven by the transaction charges, which were up nearly 20% on a sequential basis. Other operating income too saw a healthy uptick of almost 12%. On the flip side, it was the treasury income which saw a knock of almost 9%. Services to corporates too declined by somewhere around 17% sequentially. The EBITDA margin for BSE has seen a bit of an improvement, up 58 basis points quarter on quarter, but it is lower than what the street was penciling in. Nevertheless, there is a beat coming in on the net profit, and that is mainly on account of an SGF reversal, that is a settlement guarantee fund reversal of around 109 crores. This is in comparison to a SGF contribution which the company had made in the previous quarter. Net profit resultantly saw an uptick of almost 126% sequentially, much higher than what the street was penciling in. As far as operational metrics are concerned, average daily notional turnover has seen a dip of almost 35%, but on the flip side, when we look at the premium turnover, that has seen an uptick of almost 35%. Now there's a note that has come in from Motilal Oswal as well. They have a buy call target price of 7,600 rupees per share. They say that the F&O regulations have been beneficial for BSE with respect to a rise in the non-expiry trading activity, and we did see that given that NSE shares in the equity option segment dipped to almost 81%. They've also gone ahead and revised their premium ADTO estimates to 15,700 crore for FY26, 19,000 crores for FY27, and they see further room for this to expand going forward. Overall, they've gone ahead and raised their earnings estimates by 9% for FY26 and 13% for FY27. So strong set coming in from BSE. They've managed to gain some share. Bullish call from Motilal Oswal, keeping the stock buoyant in trade today.
Right, we take that point. Vamakshi, thanks a lot for that. Meanwhile, at the bottom of your screen, big boy MRF, big boy in terms of the share price, 1,40,000 rupee share price, up 4% on the back of good numbers coming in. Revenues up 12%. We've seen margin expansion as well, if I remember correctly. And at the same time, the company has approved a final dividend. Obviously, nothing in front of the massive share price that there is, 229 rupees. But importantly, the final dividend that they give every year, the quarterly dividend for MRF is just 3 rupees. The final dividend is a lot higher, so it's about 229 rupees. But that's not the point. The numbers are good. Net profit growth of 30% over a revenue growth of 12%, implying margin expansion. Crude prices lower implies that going forward as well, margins would be a lot better. Take a short break. Come back, get you more stock-specific news on the other side. Back, let's look at some of the earnings that are, likely to come soon. We had some line on MRF saying that the margins at 15% are higher than the Bloomberg estimate of 12.5% as well. We've been talking about how the margins have been a bit but let's talk about United Breweries. That reports its fourth quarter results today. And what is it that the street is expecting? We have a sneak preview into the volumes already. Net revenue grew in low teens, whereas beer volume grew mid-single digit, and that growth lagged market largely because supply in one of the major states, which is Telangana, was halted for 12 days in the quarter, and as a result of which we would see volume growth come by at just around 4 to 5% against the last quarter growth of around 8% itself. Premium segment, however, is continuing to do well, so that is likely to grow upwards of 20%. Put all of this together, revenue ex excise would be 8% higher. EBITDA grows 22% and margins increase by about 70 basis points. The net profit grows by 11%. 200 basis points is the volume impact due to no sales for 12 days in Telangana. Disruption for beer industry in January in Karnataka due to excise duty hike will also impact performance. UP and Assam, however, are likely to see stronger growth, and premium segment grows over 20-25%. Importantly, the margins will also be supported in the remainder of this quarter and the rest of all of FY26 by the 15% price hike that was allowed in Telangana. So all these things will be very important for United Breweries. Most important would be the volume outlook and the margin outlook for the next year, now that things have settled across states.
Okay, all right, fair enough. So that's on United Breweries, but Voltas will be reporting its Q4 numbers. Upasna joins in with street expectations.
Well, we are expecting a stable quarter this time around with a revenue uptick of 17% according to our poll estimates. EBITDA, we are expecting an uptick of 85% at 354 crore, and EBITDA margin we are expecting to expand sharply from 4.5% to 7.2%. PAT, we are expecting a 110 times increase from 116 to 247. Now, there are significant losses in EPC seen in Q4 FY24 to drive optically high growth, which is likely to be seen in EBITDA and PAT this time around. Now, we are expecting a robust UCP growth of nearly about 20% on the back of strong summer season offtake. And this growth will be mainly driven on the back of 24% growth in RAC segment of the company, 13% by commercial air conditioner, and 5% growth in commercial refrigeration, according to the Kotak estimates. Now, this RAC revenue growth is expected to underperform the industry on a relative basis on account of high base and companies' loss of market share. Now, let us look at the key things that we'll be closely watching out for. We'll be looking out for the margin and the demand outlook commentary of the company, its market share gains or losses commentary and the way forward, and lastly on the new order additions in its project business. So overall, expecting a stable quarter from Voltas.
Okay, all right, Upasna, thanks very much for that. And on that note, it's a wrap from Mangalam, myself and the entire team of Halftime Report. Thanks very much for watching. Business Lunch up next.